So it's been a choppy week for markets, with FTSE now 3.7% off its recent high. This morning we've had industrial production numbers for May in the UK, which were slightly disappointing, so sterling is off around 0.4% against the dollar. This week has been really characterised by the ECB and the Fed minutes, which have extended the rally in bond yields. We've now got the Bund, for example, above 0.5%, and that really is symbolic of zero interest rate policy now being a thing of 2016, something that we're less likely to revisit. That has really big ramifications for asset allocation and sector allocation, which we'll touch on in due course. In terms of equities, though, this is traditionally a good point in the cycle for them. So you're seeing growth rates and momentum pick up with inflation, but you're not seeing the brakes that are put on to slow inflation starting to affect profit margins because interest rates remain very low. In terms of valuations, the relative valuation still is extremely good. So if you look at 10-year gilt, that's yielding 1.3%. If you look at the all share, that's yielding 3.85%. We are seeing that economic momentum pick up. So we had an ISM number this week which was above expectations, and that signals the likely rebound in US GDP for the quarter. Economic surprise index in the US has been very disappointing over the last couple of months, and that's for the first time started to rebound off what traditionally is a trough level, and that tends to be a good momentum indicator for the S&P 500. The market tone, however, will really be set by the Q2 results, which really kick off next week with the financials. We've had limited pre-announcements in terms of profit warnings going into this series, so earnings haven't been guided down as much as they have been in previous quarters. And that's largely a result of US financial conditions, which have remained very benign, largely because of the weakness of the US dollar. The key positioning trade this month, however, with bond yields and growth picking up, has been from tech into financials. Year-to-date performance for technology shares has been up 15.6%, so it's been a very strong sector, but over the last month it's been down 4.8%. Year-to-date in the financials has been 6.9%, and most of that has come over the last month, up 5.9%. So on Friday, we'll get a clearer indication of whether that is justified. So we've got Citigroup, Wells Fargo, JP Morgan all reporting on Friday. There's been some pre-announcements in terms of trading activity suggesting that the low volatility in markets has affected that part of the business, but we'll get a better picture of that in the context of the wider business. The other key announcement for us will be Marks & Spencer's, which is reporting on Tuesday. That's it from me. Thanks very much.